So I'm looking at how to record some non-current liabilities. Let me just slide that down a little. So I've got accounting for loans and by instalments, so how am I going to do this? So let's have a read of the question. Cass Limited has a mortgage on which interest is payable at 12% per annum with monthly payments of $10,000. At the beginning of March 2012, the balance of the loan payable was $100,000. The interest expense is $12,000 per annum or $1,000 a month. The payment of $10,000 in March includes $1,000 interest expense and $9,000 reduction of loan principal. So what we're aiming to do now is to record what we've seen there. So that we're going to record this payment of $10,000, $1,000 is interest expense and $9,000 is a reduction of this $100,000 that is owing. So let's go ahead and do that. First I'm going to record my debits. So I'll record my expense first. My interest expense was $1,000. Now I'm going to reduce my loan payable. And I'm going to reduce it by the $9,000, which means that I'm going to debit it. Payable is normally a credit, so I'm reducing that. And cash at bank, I'm going to reduce that as well by, how much is it? $10,000. And that's one of my non-current liabilities. The last thing I'm going to look at is provisions for warranties. Now what is a warranty? A warranty is an item that most businesses have. They'll sort of guarantee that their equipment will last for a certain period of time. Usually it's a 12-month period of time, so you won't have any breakdowns within the first 12 months. And if there is any breakdowns, they fix it free of charge. Now, obviously there's an obligation there, so they have to provide an amount that is for warranties. So now they can calculate these things and sort of guarantee that they might have a certain amount. And in this case, they're looking at Electro Buzz estimates the cost of servicing unexpired warranties will be $200,000. So now we've got to record that liability. So what we have is what we call a warranty expense. Of $200,000 and a warranty provision $200,000. So that's recorded my warranty. Now we're going to look at what happens in the next little bit where we actually need to replace some goods under warranty. So what we need to do is obviously the goods are broken down and now we need to replace them. So what have we got? We've got something that's to be replaced under warranty and I forgot to write it on the page there, but it's going to be $1,000. So the inventory is going to cost me $1,000. So what we've got is we've got this warranty provision, so we need to reduce it. So I'm going to now go warranty provision. And I'm going to reduce it by just $1,000. And that's obviously going to come out of my inventory. So I reduce my inventory by $1,000 as well. So that's then how to record, obviously provide for the warranty or the warranty provision. We're reducing the warranty provision. We recognise that there's amounts coming out of inventory. But the last thing that I'm going to do is I'm going to assume that at balance date, the year after the warranty claims have been made during the year, so the warranty provision account has been a credit balance of $5,000. So this $200,000 up here has now been reduced to $500,000. And what's happening is that Electro Buzz estimates that the cost of servicing the unexpired contracts will be $210,000. So what we have to do is we have to build up our warranty provision to now $210,000. Now, because we've already got $5,000 in there of this unused portion, we now need to increase it to reflect the balance of $210,000. Now, it's not quite that, because you can see here in my description, it's actually $205,000 that I need to build up, because I've already got $5,000, I need to build it up to $210,000. another 5,000 it is. So pretty much it's exactly the same as this entry again, but just for the next year. Oops, TY, expense of 205,000 and warranty provision of 205,000. And that's how I record my provision.